All right, we're live. Mike, you want to run with that disclaimer first?
Yes. The information. Oh, let me just do that. The information you're going to hear on this Resolvers Happy Hour is for entertainment purposes. If you'd like really good investment advice, maybe it's here, maybe it's not, but you should consult a financial professional in any event on anything you might want to consider. So, just want to put that out there before we start today. And did you want to introduce Bobby?
Sure. So Bobby's. So what's your, like? Are you president? Like, what's the actual official title of RCM?
I am the managing partner and the founder.
The president reports to him.
Yes.
RCM based out of Chicago.
The buck stops with me, unfortunately. So
yes. I like it.
Bobby, we've done a lot of we've all shared a bunch of fantastic stories that I'd like you to share with us today as well from a bit of your past life. But with you guys, we've had a great relationship from the get-go. You guys run a bunch of different businesses that we can get to, but for us, it's been working with you as an introducing broker, as well as looking at some of the technology for fast execution for markets, but marketing on the future side. I mean, you guys have been in the future space. You've seen it all. So I'd love to get for everybody to get a little bit of a background on what you do now, but also how you got there, which is an interesting and fun story as well. It's a very unorthodox beginning.
Yeah, it's I started off in '98 on the floor of the CME, and that was just about when the NASDAQ was becoming a little bit more trendy to trade. And so I started off clerking for a guy named Joe Santoro, who was this 50-year-old Italian guy that was a complete lunatic and one of the greatest guys in the world. And I remember the first or the second week I was working on the floor and I was arbing the signals, and I still do that when I talk a lot. And I'm quoting Deutsche Bank and UBS, and there's a minute and a half, 2 minutes left in the close, and this guy from Deutsche says sell 50. I turn around to give it to my broker, to Joe, and he's having a massive heart attack on the floor. And I'm start screaming, "Oh my God, what do I do? Help me!" And the guy, do you guys swear on this or anything?
Oh yeah.
Well, yeah. We purposely swear to make sure the kids don't watch.
Okay, perfect. So the guy from Deutsche goes, "Fuck you, you're out," and passes it to this other guy. And only until the bell rang, the paramedics got there, and he survived. But that was like a big introduction for me to the floor, and I was just like, man, this place is insane. I love it. And
what year was this, Bobby?
This is '98. So about 6 months later, because I was pretty aggressive, they put me on a badge, and I wound up buying the seat, and I became a broker in the NASDAQ. And ultimately, we wound up controlling. My brother and I bought the group over 6 months after that, which was relatively small. And that's when NASDAQ really blew up, and we did about 80% of all the institutional flow in the NASDAQ. And then side by side, I was trading SPOOs, and because the NASDAQ overlooked the SPOO pit. And so I had clerks, my brother and I had clerks, working in the SPOOs, and we would just be flashing in orders nonstop throughout the day. And then we started a prop firm, and we were trading one of the first guys, us and Susquehanna. I'm sure you guys know who they are.
Yeah.
And Timber Hill, which is Pettigree's old company. We were the first three groups to really do the arb between the futures, the E-mini, which was completely inefficient. It was trading $15 wide, right? Laggard to the pit, which was crazy. The greatest of times.
Good old days.
Yeah, the best old days. And then we were trading options at the SIBO, and then had market makers at the Amex trading against synthetic cash baskets. So with the spreads that big, it was really a phenomenal time. And then from there I started, and I wound up backing 70 guys, did well, kind of sold out. Did a short stint in Hollywood for 5 years, which I'm sure we can go into, and then made some pretty bad movies. And then wound up starting up my equity option firm, grew that to about 120 guys. We're regulated out in 2010, and that's when I started RCM. So that's a long-winded version of my background, both on the futures, the equity option side. on the brokerage as well as the prop side. So.
Right.
That's fantastic. That's a huge arc. What are the similarities that you see in this business versus the movie business?
Oh God, the lunacy. So being, back in the days when, Goldman used to come in and they were paying you a couple million a year, whatever it was to your group, they'd say, great, we're going to whack you for 20,000 in wine. We want these suites. We want this. We're going, it was crazy back then. Well, that's how the movie business is. I mean, it's just nonstop. And back like in Chicago, at least in the 90s and early 2000s, traders ran the city, and everybody was just clamoring on the traders. You go out to these clubs, these bars, and the girls would be all over you. And then in Hollywood, it's no different. The minute you get your first article up in the Hollywood Reporter, next thing you know, you're having conversations, not Harvey Weinstein conversations, but conversations.
Let me be clear.
Yeah, I mean, I wasn't Harvey Weinstein by any stretch, but it was a great time. It was a lot of fun. I lived on the beach in Malibu, and I was still trading first thing in the morning, and my office was at Warner Brothers in the old Frank Sinatra suite, so it was like surreal to me. And one of the greatest stories I remember was very early on one of my first movies. When I lost a lot of money trading in a day, I'd go to the movies by myself, and that was my escape for 2 hours. And I think I probably have told you this story. Yeah. And then, push comes up, I'm doing a Bruce Willis movie, and the movie falls apart last minute, and Bruce Willis got into a fight with his producing partner, who was our producing partner, and getting the deposition done. And during one of the meetings, he just sat there and mouthed to me, and he goes, and I'm like, this is the greatest thing in my life. John McClane just told me to go fuck myself. I go, you think you're trying to intimidate me. I think this is awesome. And so it was,
I'm writing this in my diary.
Yeah.
New diary.
So, yeah, but it's been a lot of fun. I've had the opportunity to work with some tremendous people, not only at RCM, but before that, the household names, and you don't realize they're household names when you're dealing with them as a young guy, but it's been a lot of fun. So
that's fantastic.
That is pretty spectacular.
So when did you get back to Chicago? What year was it you got back to Chicago, started RCM again?
Started RCM in 10, really came back in 9 when 2009, when the SIBO, who was our SRO, our regulator, came in and kind of changed these rules around as far as order placements and stuff like that. And it was targeted against us, Susquehanna, Goldman, and Citadel, and the Peak Six and Wolverine. And ultimately, we couldn't survive it. We didn't have the technology. And essentially, what it was when you're trading equity options, or you have a prop firm, you have a master account, and then each trader is a sub account, or each group is a sub account. And ultimately, they came out and said, because of our professional status, we had a beneficial opportunity over anybody else, and therefore, when we're trading vol arb leap type strategies, when you place orders out in the book a year out or a year and a half out, right, or as soon as they come back online, you need to be in there, and because it's based on pro rata and whatever. And they wound up saying, you lose your place in the order book, we're charging an extra 20 cents or 25 cents a contract. And it just made it, everybody else had an advantage over us. And, for us, it would have cost us, we were trading 6 million options a month. So it would have gotten expensive really quick. So after a couple months, we just said, we had our fun. We had a great run. Get out.
Right. Yeah, nice. I do hear that feedback as well, Adam. I'm not sure if everyone jiggle their cables.
Yeah,
I mean the cable on your mic.
Yeah,
it's good. It's subsided.
When it comes back, we'll stop and figure it out. But
you're popping a little bit there too, Rod. You're a little close. Yeah, all good. So have the changes in the business been that have caused those leaps for you been more regulatorily based? So there was a gap in the market, you're filling it, you're providing service to the market, then the regulations change a little bit, and then you've got to reposition. Is that how that journey? It sounds to me like it is, but maybe.
Yeah. So certainly on the brokerage side and the trading side, regulation has had the biggest impact on all the businesses I've had in this industry. As it pertains to certain types of trades, it just gets tighter, and you're taking more risks to make less money, and so ultimately you decide to move on and go do a different trade. And so that's from a pure P&L and prop trading side. That was the biggest reason why we decided to shift there. But on the brokerage side, and certainly with the RCM, I mean, that's how RCM was really created, was the fact that after '08, the banks no longer could provide certain services. And coming out of our institutional background from a trading perspective, we felt like we could go create that almost like prime broker type model in the future space with some of the bank relationships we had. And that's essentially how we started. So kind of out of a necessity for what we were trying to accomplish also. So
that's really neat. Anything that stands out to you in that sort of that journey or that arc? Because I do want to paint a bit of a picture there, because I do want us to talk about China, and I want to talk about the shift in China and the growth in China and where you might think that we are in that arc versus sort of what your career's been, and maybe even what was your fellow's name? Fat Tony. It's not his name, but your mentor. Sort of even thinking about the stories back from his arc and his career, and then maybe positioning that.
Did you just watch that Netflix episode, the Mafia episode where Fat Tony it was all about Fat Tony in New York, Tony Slim?
No.
That's right. I literally just watched it the other night, and that's what it was all about. For me, the biggest thing that's decided where I go in the industry is where the opportunity is, right? I think one thing that has always been certain is that everything's going to change. And either you can be stagnant and ultimately become archaic, or you can be more dynamic and do a SWOT analysis of your competitors and say, how can I be out in front to be able to provide more service either to ourselves as a trader or to our clients as traders? And I think that's what we've done, including the way we've adapted and acquired different firms over the last, I would say, 7 years, whether it be the Attains of the world, to different now groups on the ag side, to our technology unit, RCMX, which is our algo unit, which has been a huge investment for us, and ultimately China as well. So, I mean, if you look at where the opportunity is over the next couple of years, where is it going to be, right? You got to look at different markets where it's not saturated, and you're going to still get those spreads like I saw back in the day, right? And I still think there's certain levels of inefficiency that exist there that don't really exist anywhere else right now.
Well, it's funny you mentioned
so if
that.
you were to map
I was actually going to pass it off to you, Adam, because I know you probably have these facts a little bit better than me. Because you're talking about the E-minis and how they were so inefficient at the beginning. And I think we were watching a webinar on the fact I think the E-mini is the most traded future on the planet now.
Yeah.
And I think I was going to pass that over to you, Adam, to maybe talk about that. Maybe your recollection of that part of the presentation was a little bit better or more salient. Just the transition in that vehicle
Yeah, I mean, it is amazing to think that. So what year was that when they launched the E-mini and it was trading 15 points wide and like what?
So I think they launched in 97. I don't remember exactly when, maybe 96, 97. But it really became kind of nuts back in 98, right? During the tech boom and all the way through 2002. One of the biggest reasons why this margins were that wide was because the product wasn't fungible at the time. So if you bought 5 in the pit, it was against 25. Let's say, 5, you're long 5, short 25 SPOOs or minis. You still had to unwind it, right? And then even when it became, and all of a sudden, as soon as it became fungible, the spreads went down a little bit, but it was still pretty wild for a while, right? And that's, remember when Greenspan used to sneeze, we used to move 300 handles in a minute. And, if you weren't on the right side, you had problems. And I think right now, like I trade NASDAQ and SPOOs here and there, not successfully anymore. I need to start using our own algos. But even with, the way I trade now, like we're trading in quarter ticks, I think, or quarter handles. Back then we were trading 5, 10 handle increments. So the market would be 70, 75, 70, 80. And, if you just sat there and, hit the bid, hit the offer, you made 10 grand just like that. So, and that happened all the time, but in 100 lots, like you were,
right.
I mean, so it was a good time. It was a lot of fun. I mean, but
and
also,
now contrast that.
I always say, I always say if you were a bad trader, you did okay because momentum was your friend. If you were a good trader, you crushed it. So
Right.
Yeah. And I guess where Mike was going was, I mean, we just watched a presentation on the rise of the carry trade, and they were zeroing in on ES as the primary vehicle to source liquidity. And I'm not exactly sure I got the numbers right, but something like 15% of all total dollar volume of financial transactions, like liquid financial transactions in securities markets globally, take place through the ES. Like, it's just astonishing, the growth in this single instrument, because every risk manager in the world hedges their risk using ES, right?
That's right. Whether you trade in equities or whatever else, and certainly before equities was trading, in after hours, when we had our equity option positions on, we always used to normalize everything to the SPOOs. So we would come up with our, whatever our formulaic model was, and say, okay, we have this delta exposure, whatever else, and let's say there was biotech stock earnings coming out. We were petrified because those things were gap $90 at a pop. And so we would hedge against a synthetic basket against the SPOOs or the futures. And I think that wasn't unique to us. Everyone does that. And it's still to this day does it. So
yeah, now every pension, endowment, bank risk desk, every institution in the world is hedging their systemic risk using ES futures. And so
the VIX, right? It continues to be just based on that US market.
Well, I think the thing is the source of liquidity, right? What is going to be able to trade in that period of time of duress?
And
so it becomes the default.
And certainly, as we see, because we deal with a lot of big commercials overseas and whatnot, they're, especially if they're publicly traded or whatnot, people want to start, they want to be trading almost exclusively exchange traded products versus OTC, because investors, boards, whoever, they want the transparency, and they also know they want the liquidity. And you get that. And that's why I think a lot of those products, whether it be VIX, whether it be crude, whether it be certainly SPOOs, NASDAQ, Russell, whatever it is, the volumes have just gone up dramatically, right?
Yeah, you minimize counterparty risk, right?
Yeah,
you're
that's
doing
right.
through the exchanges. So I think the arc of this is, you understand that there were inefficiencies back then for the SPOOs. That we've seen more and more efficiency in the most traded market on the planet, and this varies depending on which global equity market you're trying to trade in the futures exchange. But what we're seeing after speaking with you guys for a couple of years on China, I mean, they're doing a large push to try to legitimize their futures market.
Yeah.
And how they're trying to get that market legitimized is by asking players all over the world to come and partner up with other firms locally in China to be able to just simply trade, like create some liquidity, and then possibly, if you can, make some money, right? So how are you seeing everything you've learned in the past translate into this kind of frontier market in China?
Yeah, so that's a great question. The way we look at it is they're about 20, 30 years behind us. In so many ways, in technology for sure, as it pertains to trading, for sure, right?
Yeah, because you guys are kind of building a lot of the new technology. You're like at the frontier of this and really helping them learn how to trade these things, get the technology up to speed and all.
We're trying, right? And it's not just to benefit us, it's to benefit everybody, because as more stuff becomes more liquid and they start bringing out more contracts, then more opportunity exists for everybody. But yeah, we have been at the forefront of trying to educate them, whether it be on certain technologies, on Western, thought processes, to understanding outside due diligence, setting up structures in Hong Kong. I do think where we've seen, technology become more in play in the Citadels and the Jumps of the world to take advantage from a high frequency perspective, and then CTAs come into play, let's say on the future side, or hedge funds have their moment. That is still relatively young there. And you're seeing quant groups do well over there, whether it be on the future side or doing some sort of ARB or, long short. The quants are actually educated in the U.S. and most Chinese used to stay in the U.S. Now they realize, well, there's a hell of a lot more opportunity to go trade and make money there. The biggest challenges you have there, if you have success, is piss off the wrong person, and next thing you know, the regulators are there, or they just shut you down one day, or if you get big enough, the government just says, you know what, we are 70% of your assets because they're through government, SOEs. And now you work for us. And guess what? There goes your first class ticket. You're now flying coach. You're now getting paid a couple $100,000 a year versus 30 million USD a year. So
yeah, I remember when Russia, a trader I was talking to said the same thing about Russia, 20 years ago. He's like, if you want to get screwed over, go and build a successful business in Russia. Because the moment that you're successful, the government will come in and take it all away from you and possibly put you in jail. Right?
Yeah, there's no doubt about it. I'll tell you, every time I go to China and I come out and I get through the 4 stages of customs, I thank God I make it to the other side. And until that plane's up in the air, you just don't know, because, you have, if you're having any bit of success there, and let's say we're working with one fund over there and we choose to take one of our CTA clients over there to that one fund and go live, and we decide to pass on this fund, that fund was going to get pissed. And they start making calls to the CSRC, which is obviously our version of the SEC, FINRA, CFTC. And there's no due process. It's you're shut down right now. And then, you have trouble getting money out of the system, and it just becomes chaotic. And so we've had to deal with those issues, and I can tell you it's scary when you're over there, but it's very tough to work in that type of environment that is so different and not westernized to the level that we're all used to.
Yeah, the rule of law,
and we take for granted, because there's so much. The regulation actually works in our favor a lot here because there is that transparency, and but try getting a fund admin to work over there. It's just 2 years ago, they didn't understand what a fund admin was. And, they've got, if you're trying to do due diligence, like us and LGT, we're just working together on this one strategy over there. Well, how do you actually figure out what their return profile is? Because they're not actually reporting it. And they have 70 different SMAs, which are called funds. And how do you know they're giving them this program versus that, return profile? You just don't know.
So my brother works in Lima, Peru. He works for a private equity firm, and they have a private equity fund, all private assets. He calls me the other week and he says, listen, I'm trying to figure out a way to get, we have to put our NAVs online now at the end of each month. And do you have a software that we could use that we could upload? So I call him up and I'm like, all right, well, look, all you need to do is make sure you can use this software, but all you need to do is make sure your administrator uploads a NAV on an FTP site where they can pull it. And he's like, administrator? What's that? And I'm like, well, whoever calculates your NAV. And he's like, oh, we do that.
We make that up. I mean, we do that.
Like me and my partner. Like, do you guys literally type in what you think it's worth? Put it in a spreadsheet?
That's not that far off the private asset market.
Yeah.
North America.
I mean, and what do the regulators think about that? I'm like, I don't know. They haven't said anything. But how do you evaluate? It's like we assume that, certain metrics, we put them in and then people will believe us.
Yeah.
Right? Like this is where I'm like, okay, well, then whatever you're plugging in, just plug it into this piece of software.
It's funny you say that, because I remember when I first started in this space, with RCM, and we brought on Paul Rieger and some of those guys, and who have done phenomenal things with us. They after looking at some of these larger CTAs, I actually had a couple $100 million on the management. I said, well, how do we validate your returns? Well, who does your numbers? And they said, well, we do. I said, what do you? And we made a policy at RCM about probably 8 years ago to not work with funds that were not using third-party auditors and fund admin, because you just can't validate. And it was the Madoff issue, right? So I think it still definitely exists over in China. I can tell you that.
But clearly the thing is to be there for, I mean, when we were discussing China, one of the key things was, well, who's got the most experience 10 years from now when it is a viable business and people do want to do a lot of business in China? You're going to want to go with the most experienced firms, right? The people that have been there from the beginning, the pioneers. And so the decision to kind of think about China was one of, do we want to eat the shit for the next 5 years in order to be at the top of the heap in the next 10 to 15 years? Which is an interesting question, right? Is it worth it?
you're right. I mean, when the way we looked at it from our perspective is that we went around to some of our competitors, not so much in the futures business, but like BTIG, Cowen, groups like that. And so why are you not going? And it's just too expensive, too hard, too much time. And that's when we said we're going. And, I think, you
like a prop trader.
That's right. And I think that's when we hired this guy, Wayne. We trained him in the U.S. for a year, sent him back to Shanghai. But we knew it was going to be a slug. And, when we bring on traders to go to introduce them over there, remember, we have the entity, we set up all the compliance, the legal, fully licensed, and built our technology into all the APIs of the exchanges. Real pain in the ass, and doing everything in Mandarin, coincidentally. And
the way they calculate the floors. I'm sorry, go on.
No, I was going to say the benefit you're going to have is that when big funds, whether it be the Blackstones of the world or whoever else, or the Millimans that go out there, they're going to be in the same boat as you are. If your returns are good, you're going to be able to go access cash because you're going to need a 2-3 year track record in order to do that. Oh,
we can hear you.
My screen just went dark. Let me just try to.
We can hear you and see you, so you're okay in that.
Yeah,
While
your
you're doing
camera's
that,
working well. So is the microphone.
So so it's I think anybody that goes over there now spends the time, if they can handle the burn and the time, then I think it will pay off if your returns are there. You got to remember, so the portfolio diversification, that's not even in their vocabulary, right? Chasing returns is what they do. So you really have to be, in the mindset that you're putting in good return profiles for the next 3-4 years. And then, as the rules and regulations open up, where they do allow Western investors into, let's say, PFMs that, and trade futures versus just securities or whatever else, and there's a good way where you don't have renminbi exposure, then you'll probably be able to raise some outside money from the U.S. and or Europe. And that's what we're seeing now. And that's the structure. Literally, I had a call last night with an investment bank that has a Hong Kong wholly owned entity and also a China entity, very big in China, one of the top 3. And we're talking about doing the swap product. And that's how we're going to take a couple strategies from the U.S., bring them over to the mainland China to trade the Chinese products versus swap, and try to go raise, however much money we can raise for the products.
Yeah, there's two sides of this, right? There's the outside investors, the investors outside China that are interested in how do we trade Chinese markets because it's a new frontier.
Right.
I guess the expectation is the markets are not nearly as efficient, so the opportunity is potentially much larger. And then you've got the Chinese investors who are trying to access external managers or, divert their capital out of China and access. Yeah. And then you've got managers who are in North America who are being interviewed by Chinese investors to trade Chinese markets, right? I mean, we had a few of those meetings, like a year or two ago, Rodrigo. We were in Chicago when we were talking to some investors that had come over from China and were looking to learn about how some North American managers might apply their approach to trade Chinese markets. And that was a jarring experience for us because the people that were interviewing us were themselves traders in China. And somehow the expectation was that you were going to generate hundreds of % a year. I mean,
that was Bobby.
Yeah, I was about to say that's probably Bobby.
And remember, I can remember his name, but he's like, look, I made like 300% last year.
Yeah.
But I don't expect you to do that. I'd be happy with, 50, 60%.
Yeah, right.
That's right. Exactly.
Oh, that's where we're at right now. Okay.
That's no joke. And it got to the point where I saw some of the return profiles and I was meeting with people in Beijing, Hangzhou, all over the damn place. And I'm looking at these return profiles and I'm like, this can't be real. And then finally I look at Bradbard and I said, screw trying to get our managers funded over there. I need to figure out how I invest in these strategies because I'm done in a year. Like I'm retired. I'm going to Cayman to be with you guys. And it's unbelievable. But you know what? They do incredibly well and all of a sudden they're gone. And the guys that were the quant firms that were doing incredibly well, decided that if we're making this much money, let's take our fund private, give everybody their money back. And essentially what we do is a family office. And that's how they all of a sudden, this one guy who was 27, who went to University of Texas, MBA, make $300 million. And I'm just like,
and is that a function of, so you got the second largest economy in the world, probably one of the largest, sort of commodity consuming markets. And thus, you have the producer and the speculator helping bridge the gap to get some sort of return. Is that a function of the ARB being that big, or is it just like a long levered trade that is backed by the government, or is the Chinese government involved in these markets to an extent? Like,
there's no doubt they're involved. And all the people that control the big commercials, and it's all tied to the party, right? And you have to know that going into it. But one thing that's very unique about the Chinese market is that it's about 95% driven by retail investors. And so with that comes a lot of inefficiency. If that were to start to go down, I believe a lot of these strategies that are crushing it would not be as successful. Still very successful by a Western perspective, but not nearly as successful as what they were, right? And so, so that's what I would say as far as why there's that much of a discrepancy as far as the return profiles, because it really is herd mentality over there.
Yeah, once the market runs, it runs for a long time. Like the thing that I was just talking about, how trend works, right? This narrative that trend is whatever's working will be there and we'll make money on that trend is not true. That for trend to work, there's generally long-term periods of choppiness, and then one massive trend that happens every 3 years that everybody catches, and you get this massive boom. When in the Chinese market, if you look carefully at the stocks, when they trend, they go hyperbolic for a long time, and then they go down and break for a long time. And if you have that type of reality, and you're a trader that can be nimble enough and has the assets, because I remember the amount of leverage that they were using, the amount of ups and downs that they had in their portfolio was massive. I mean, they're taking massive volatility, but if they believed that trend was going to continue the way it had, or the length of trend was going to continue the way they have, you're going to make tons of money.
A lot of the products out there were long only for a long time, right? And so you were able to trade and hedge what
so we're introducing buyers to compete with the professionals who need the resources to actually build the bridges and buildings and bake the bread. It's like
it's unreal, right? I mean,
it's a bit unreal.
And so now they're allowing these groups to trade more and more and hedge against some of the indices, and that really didn't exist a year and a half ago. As a matter of fact, I was over there during 2 of my visits. They changed the rule in real time, and where you can hedge against 10 contracts, now 50 contracts in one of the indices, and WeChat was blowing up, and the brokers were on the traders faster than the traders knew, because the brokers we're going to make that much more money, right? It's unbelievable how that went. I'm just like, holy cow, this is insanity. But it's just the way it is. I mean, so a lot of these products were long only. Now they're getting a little bit more creative with them. But we'll see what happens. I mean, as it opens up and they bring on more products and there's more liquidity in them, I think that it's going to be a phenomenal trade.
What do you think of the involvement of people like Bridgewater and that sort of thing? Are they anything special, or just?
So when I went out there the first time, there wasn't a bank there that we had ever heard of, right? I mean, it just didn't exist. A year and a half later, they're all working to get their way in there. In all the major firms, there were 22 licenses that were provided. I think Bridgewater had one of them. BlackRock, a couple of big guys. On our side, there was Winton, and then one other one. And ultimately, they didn't succeed, because they thought the name enough was going to be big enough where they would get massive inflows of AUM. And at the end of the day, they just didn't get them because the returns weren't there. And not only that, the brokers, if you think about it, think of the RJOs of the world, right? All those independent FCMs. So they've got 100 of those things over there, right? And they're relatively big. And then all of a sudden you have a Goldman or a JP Morgan come on board and you're trying to go after their business. Well, you can't legally invest. Goldman can't take U.S. money and invest it into Chinese managers. It's just against the law. So where do these managers actually raise money? They raise them just like the introducing broker model here. All those FCMs are really introducing brokers. And so they want you to clear their business. Great. I'm going to introduce you to all these investors. And that's how it works. So, at the end of the day, nobody went with these guys because they were trying to clear the U.S. counterparts, and they made that big mistake. So they weren't able to raise money, and their return profiles were not great.
It's like everything, right? When it comes to the frontier markets, it's all about relationships. Like you have to roll up your sleeves, get down and dirty, get to know the people. I mean, what you guys have a local, and I think you were the first ones to have an. That's right.
Got to work on my karaoke.
You were the first one to have an office there too, right? Or one of the first. Like you opened up an office there for I don't know if you still have it or not, but.
And so when we first went out there, I remember I was out there by myself, and they're like, "Yeah, you're going to come out here, you're going to do the dog and pony show, and then we're never going to see you again because you're going to realize this is a shit show, and it's way too hard." And I said, "Well, what's going to make you believe that we're going to stay?" And they said, "Well, you have to hire Chinese nationals and open an office." So I said, "Okay, we'll do that." We carved out the budget and we did it. And so that gave us some credibility. And that's where a lot of firms fail. You have to understand their culture and what's important to them. And then you have to learn, well, you can't go. And this is where Matt and I have gotten into arguments, because when Matt first came over, Matt Bradbart from our office, who actually runs our China operation, he was like, "Well, in America, this is what we," and they're like, "Yeah, who gives a shit? You're in China."
Exactly.
Like, welcome. Now eat the disgusting food and and we're gonna have these little shots.
Adam loves that food. Throw him a bug on a stick.
You might like Chinese food, but I don't know if you've ever had this food. It's
the cobra tail and the.
I'll tell you right now. When the first night they took me to this great place, and I wish I should go get the little vodka thing. You take these little shots, and it's like rubbing alcohol. And you don't know what to expect. Like, thank God I bought Prilosec with me, because I would have been in a lot of pain. I mean, it was, and I said to Wayne, I said, "Hey, make sure you order something for me, because, everything's on a lazy Susan, and they do this, and it's a real toasting culture, and you just get wrecked." And he goes, "Don't worry, we got you chicken." I go, "Where is it?" He goes, "Here." And I said, No. That's raw skin, and there's a feather in that. He goes, chicken. And I said,
I think I see a beak and a claw, or a beak or a.
Luckily, I was staying at the Four Seasons, and I was ordering up as soon as I got home. And then you hit breakfast hard, and then you're screwed. But no, but actually, you get used to the food, and it's actually really good. I mean, listen, the people in China, they want to do business with the West. It is a unbelievable opportunity, and they're really great people. Like, everybody tells you to be careful. They're going to steal your IP. They're going to this. If you're working with firms that are truly regulated, that manage a substantial amount of money, and they're on something called a whitelist, which allows them to take on government funds, they don't want to screw up their reputation either. So you got to understand the questions that you'd have to ask. Just like if you're going through a CTA and you're doing the DDQ, they don't exactly have that there. That doesn't really exist. So you got to figure out the right question to ask. And if you do business with the right people, you have a great time with them. You can work with them, and you can expect good outcomes.
I suppose in our business too, the one thing that this whole domain of investing is used to is the theft of IP.
Yeah.
I mean, it is constantly changing, amorphous, as you mentioned earlier, Bobby, about going to where the opportunity is, seeing where they are, seeing what the edge is, and then filling that, or arbing. The act of arbitrage is just simply to facilitate a more smooth and efficient market. And so the pursuit of IP in our business is, an ongoing process forever, and it is the game. I mean, you don't get to TM your investment algorithm, and then no one else can do that anymore. That's not the way it works. So it is a slightly different playing field, I think, than most. So it's that's pretty cool.
Yeah. No,
I remember on the toasting culture thing. I remember when we were in Chicago with I don't know who was with us from the entourage in China, but every 2 minutes we were cheering for something. It was constantly drinking for hours on end while trying to eat. So you just kept ordering more food to make sure that we were on the even keel, because they can drink heavily for a long period of time in ways that we can't.
I tell you, it's I mean, the first, it's terrible. I mean, and I'm a boozer, and you really have to keep up. And it's like you go to these places. There's no, I'll get a kettle soda lemon. It's only this rubbing alcohol, and it can be brutal. And it's, I mean, and,
listen, you only go blind after 5 or 6 drinks. Everyone jiggle their cable again. That the feedback is coming.
Are you sure it's not you, Mike? I'm worried about.
I've unplugged, I've plugged, I've.
If it's me, I wouldn't know how to fix it anyways. I'm just being honest with you.
That's okay.
Right.
But yeah, you guys have to make your way over there at some point, because it's, first off, like Shanghai and some of these cities. Beijing is terrible. It's way too big. But some of these cities are just amazing over there. They truly are amazing cities. And the technology that they use outside of clearing and, DMA access and everything like that, on the future side or the security side, it's phenomenal. Like you don't use cash. Like for me to have renminbi there was people like, what are you doing? It doesn't make any sense. I mean, it's really sophisticated. It's very smart. So
how do you compare and contrast sort of the breadth, depth of products that are offered there? Do they prioritize sort of more financial commodities? Do they prioritize more, sort of the metals, the energy sector? Right, what's their, is it soybeans? Is there a bunch of agricultural stuff that's not relevant in the economy here versus there?
Yeah, no, there's some really esoteric products there that we never would even think about. I actually pulled it up because I knew you guys would bring this up, and I don't know because I'm not dealing with it every day like Matt is. But I mean, there's polyurethane, stuff like chloride, obviously rapeseed, more, it's just some really crazy stuff. Rebar, PTA, which is a type of acid. It's bizarre. So I think it's mainly based on what the economy is doing and the commodities in mainland China and then other parts of Asia. But yeah, I think the big thing is the commodity side. They want to get remember what they're trying to do in crude oil is make that the underlying product that everyone's going to use as the benchmark over the next 5 years or so. And I think they have a real opportunity or change everything to renminbi based versus USD.
Well, that was my next question, is how much of it is renminbi versus USD, or that Asian, have they converted to any of that Asian basket of currencies that they wanted to?
It's all renminbi based.
So all of the commodities are denominated in renminbi for that.
Everything's renminbi based. Even like when Australia and Singapore or Hong Kong, whenever they're trading those products, it always settles in renminbi, unless you are able to get it. It's never going to say, I haven't seen anything settle in USD. I just don't think that's going to happen. And they're not going to allow it to happen because they're trying to compete with us, right? But I think maybe as more financial products or the fixed income products come off, you'll have an opportunity as QFI or RQFI comes into play, which is essentially the quota system, which allows you to invest into Chinese products from offshore. And likewise, probably in the near future, I think that will change where if you're in Hong Kong or based out of London, if you're doing certain types of swaps with international banks, they'll let you do USD denominated settlement. So
go ahead, Adam.
No. If you had something else along that track,
keep going.
I was going to flip the script and sort of say, what is just going the other way? What is the interest in Chinese institutions or Chinese commercials or, maybe even Chinese retail for investing in non-Chinese markets, strategies, products? Like is any of the capital flowing in the other direction?
So everything wants to flow the other direction. They definitely want to do more business and invest in the US, but they also realize, remember the major family office in the investors, while 5 years ago they wanted all their money out, the opportunities in mainland China right now, right? So they're keeping their money there because they believe that's going to be the biggest appreciation of their wealth. And and obviously you can put 50 grand or something like that overseas a year. But if these guys want to get money out, they do it through import export business and stuff like that. But yeah, they want to invest in the U.S. and in European markets. A lot of them do. And but the people that we originally talked to, they're like, we're no longer interested. We have more opportunity. We can make more money here. So as far as the major commercials, we're dealing with a massive pork buyer out in China right now, and poultry buyer that typically buys from Brazil. We're trying to bring them to buy from a major producer here in the U.S. that's a household name, and we're trying to do it because we make a spread on it and whatnot. And it's huge. It's absolutely massive, way above anything we should be working with. I don't know if they should be going to like a major bank instead. Somehow they're going through RCM, so we'll take it. But
I love you, Bobby.
Yeah, I mean, there's all now you see these commercials that want to do business with the U.S. and they're getting permission from China because of everything that's going on with the trade talks and stuff like that. So we're seeing more of that come in from a commercial perspective, buying in the commodity world here in the U.S.
So this is an expression of goodwill from the party to allow some of this agricultural buying by Chinese from, I guess, primarily American producers, right?
Yeah,
and it's
100%.
Primarily agriculture at the moment.
100%. Because even so, like the group that we're talking to 6 months ago, they wouldn't have been able to do that.
Right.
Or at least even have the conversation. So.
Right.
Very cool.
So how did you claw your way into that kind of deal, Bobby? Come on, like
I'll tell you right now how that deal came apart. One of our big investors in mainland China said, "Hey, would you want to talk to this group about hedging pigs?" And I'm like, "Yeah, I'll hedge some swine. I don't know. Yeah, we'll figure that out." And I listen. I've never traded hogs or anything. I'm like, but apparently there's 20 different cutlets and stuff like that. And I get on the phone with them with Matt, and I'm like, what the hell are these people talking about? And they're very smart, very sophisticated, but they have never been able to hedge or anything like that. And they've had some big exposure. And so we brought on we have an ag division. So we brought them on and we're working the order now. And then we partnered up with a group out of London that deals specifically with this to make the deals with the U.S. packers. So,
boots on ground, roll up your sleeves, get to know people, and get some business. That's
right?
Third world way.
That's right.
It's also amazing. I'm actually stunned. Not stunned, but the global complexity of the supply chain is kind of awe-inspiring.
It's
right how that web actually interacts and works as an emergent phenomenon with so many random parts. It's truly amazing.
I'll tell you where I've really just understood the supply chain globally is with our technology, with RCMX, we do a lot of business with major commercials, right? And you think BP is a massive oil, right, and energy group. They're small compared to some of these private firms. And I'll just throw out a bunch of names because then it's generic enough where they may or may not be clients, but you've got like Total, right? I don't know if you ever heard of Total. Trafigura, Vitol, Mercuria, Cargill, right? These groups truly run the supply chain. I mean, they're the ones that are making up they're so much bigger than BP, and they're all privately held. And they control every aspect of the supply chain, from owning 50 cargo ships, train routes, storage. They've got the physical side. I mean, it's unbelievable how sophisticated and smart these guys are. And they crushed it a couple months ago when oil went nuts. So crushed it. And I talk to the CIOs, CTOs of these firms all the time.
Opportunity of a lifetime.
What's that?
Opportunity of a lifetime for them.
They said we just made more money than maybe I'm getting a jet. Like
the Illuminati.
Yeah.
Yeah. It's unbelievable. But that's how they really control the supply chain. And if you look at, I don't want to promote RCM because that's not the purpose of this, but even what we're trying to do in the ag space is we've decided to get involved with now an elevator and now this and this to try to control some of the supply chain to bring the cost basis lower for our clients in that space. And once again, I didn't even know that existed really. I just eat cereal, right? I just eat this, give me a loaf of bread and I'm a happy guy. But really it's fascinating how sophisticated every aspect of that really is.
Yeah, no doubt. Look, we got one of our regulars asking when you're going to produce the biopic of the life of the Schwartz brothers.
Oh God. This would be a really dull movie. Oh, Jason. Okay. Yeah, that's never going to happen. No, I don't think so. I'd rather do a biopic of the Harvey Weinstein brothers, him and Bob. A little bit more interesting than just me and my brother. We're just a bunch of dumb traders. So
you must have had to deal with Weinstein when you were back in the West Coast.
I did a lot of movies with Harvey. I know him pretty well, actually.
You have some good stories. Yeah, definitely gotta.
I do, but that's something I definitely.
Yeah, let's cut that to the. Let's go to the. Let's take that to the green room.
You told me a story when we were in New York recently on the Hedge Fund Management Awards, it was just one time when you were in the trading desk, and you thought you were having a heart attack. And just the way they dealt with that, going to the fact that there was a nurse down the hall that dealt with all the traders that would lose their minds.
Yeah.
Set back to finish the trades. Love to hear that story, actually.
No, that was on the floor. Because people would OD, right? They'd stroke out. It was pretty crazy. So we had a full ER on the floor of the CME. And they had it on the CBOT as well. And I started having these massive panic attacks. And I would go down. I'm like, I'm having a gripper. This is the big one, and they would be like, Bobby, here's an Us magazine, and take your Xanax and get back out there. And
the nurses would say that to him.
Yeah. I mean, it was, they knew how I was because I was having all these panic attacks, but I'd look over and I'd be like, oh, hey, Steve. And he'd be like, I know, because he has panic attacks too. And I'm like, oh, what triggered yours today? I mean, it was pretty insane. I mean, but they had that ER there for a reason, and I saw him carry out a lot of people.
Turn to the guy next to you and be like, "Can you cover my trades for a second? I might be dying right now walking on the hall."
Oh yeah. And there's no doubt. I'd be like, "Hey, what's my position?" to my clerk, and I go like this, and get him to my brother and have my brother cover him. But it was very crazy down there. I mean, it was a lot of fun. I mean, you want to talk stories? I've got stories that would knock your socks off. So
okay, well, we got 5 minutes. Choose one.
Oh, God. It was one of those things, and once again, this was a lot different time where you'd be out getting drunk, and whether I could have literally. I'll tell you a great story. So a guy came over, and we had now trade, and we kept on coming at it. He'd be like 7 on 100. I'd be like, sold. And it became a pissing contest, right? This one I was trading my own account, and he goes 6 on 100. I go, sold. If you love him at 6, you're going to love him at 4, right? And you're going to love him at 2, you're going to love him at 0. And he kept on doing it. Next thing you know, I'm offsetting with spoos. I've got like 700 futures on bigs, not the minis. He's got the same thing on. And we look at each other and we just like, what are we doing? He goes, I go like this, and he goes 6 minutes. I go, say you 700. He goes 500, and we're just like, thank God we got of that. And the next day we're just having a beer, going, how stupid were we? Both of us could have bought $15 million real quick, and it was nuts. But you would be out at happy hour at 4:00, and people like, what are we gonna do tonight? And like, gas up the plane. Let's go to Vegas. We'll be back in time by the open. Or when I was living in New York and trading out there. Gas up the chopper. Let's go out. We'll hit AC and be back by the time the open was. And, you go trade the open, fall asleep for 3 hours, and come back and trade the close and rinse and repeat,
A sustainable lifestyle.
Yeah, right.
I see that the utility of the nurse's office was more than just for panic attacks.
Oh, let me tell you, it was they were great people. They really helped a lot of us out. So
what do you guys pioneered?
What do you think your movie career is going to be like in China? When are we going to launch that?
That's already there, man. I'll tell you right now. So Hollywood has raised a tremendous amount of money out of China, and all these Chinese investors have all gotten crushed. So I don't think there's a lot of money coming back into Hollywood anytime soon. But
well, the other way around. A lot of Chinese movies coming out.
There's a lot of Chinese movies coming. I mean, listen, it's one of the biggest territories in the world, right? So, and they're not pirating anymore. They're actually trying to make money off the industry.
Well, I also think that they like the key characters that are in movies are paid for, right? You get funding. It's like if you haven't, so Marvel's launching several, Asian type, which is awesome, superheroes, and I think you get funded for that if it comes to China, and you get a actual break, or I don't know exactly how it works.
If even here in the U.S. or if you go to Asia, depending on how much you film there, you're going to get a tax incentive, right? Anywhere from 15 to 40% of your budget. Now, if you're making a $30 million movie and you're telling me you're going to give me $12 million back to film in your territory, yeah, I'll make it look like Toronto in Shanghai if I have to. You'll figure it out because it reduces your exposure and your break even's a lot lower. So that happens all the time. I mean, but if you look at movies now, just like business in general, it's becoming more diversified, and they're bringing in different actors. Because I'll tell you, I'll compare it to when I first started trading. My indicators were, the bonds, crude, gold, right? All domestic products. And then by the time I left, it was a global marketplace, and you had to really have global indicators as far as what you were looking to trade. It's no different in the movie business. Probably every industry now is that, you have to bring in Chinese actors into your films. You have to bring in someone from a German actor. You'll see German actors come in because it's a massive territory. They spend a lot of money over there. Stuff like that. And I don't think that's ever going to stop. And I think Africa is going to be a big place that they're going to focus on in the next 5 to 7 years.
So Bobby, I in the last few minutes that we have, I've never asked you this, but when you left Chicago,
yeah,
what made you think that you were qualified in any way whatsoever to get into the movie business? Like, what possibly could have gone through your head to say, like, yeah, I'm gonna do that? What was the leap?
Can I guess?
I knew.
I want to guess.
I built.
You were overconfidence?
No, I think he couldn't handle the party life of the market anymore, so he had to take a break.
Yeah, right.
So it was just too intense for him. So he went to Hollywood.
That's right. That's pretty much no. I think at the time I was 30 or 29, and I said, you know what? I love going to the movies. I think I'm going to go out there. And Goldman had just done M&A on a deal that I was part of, and I wound up doing some consulting for Goldman Sachs out there for the Special Situations Group, and that was like getting an MBA in Hollywood real quick. And everybody opens their books and their doors, and I came up with a factor model. Just like trading, for making movies. And I came back to Goldman and I said, and they were going to do this Paramount slate. And I said, you're going to get crushed. It's like the Wild Wild West out here. These guys don't know what the hell they're talking about. And they don't really, everybody's creative. Nobody's financially savvy. And I said, okay, I'm going to be able to do this on my own. Came back to Goldman after traveling back and forth from New York 20 times and said, you're going to get crushed. Don't do it. I started my own deal. I raised a couple $100 million pretty quick. From Fortress and Grosvenor Capital out of London. And based on my exposure and my factor model, which is still used today in Hollywood, I was like,
so are you the progenitor of the factor model, which is the key actor, the place it's shot, being the function of the success of the movie? Like there's like 3 key factors that you have to have so many A, B actors, where you're going to shoot it,
well, yeah. So that's all part of it, right? So that'll determine on what your budget is. But to me, the factor model was you had to have X amount of things in place from a prep, from a legal, from a overseas contract, your hedge. And there was about a 72-point factor model that I had to have about 60 of the points covered in order to trigger the movie, where I only knew I was taking about 15% exposure on any one film. And so that's kind of the way we did it, with knowing that we, even if you hit the cover off the ball, you're not going to make $100 million like a Blair Witch Project, but you'll do very well, and you'll make a good return on capital. So when I went out there, I started my own deal after I did the consulting, and my first movie was a hit, and I scalped it essentially.
Well, what was it?
It was a movie called Unknown, and it was
it is.
The way it was, yes. And by the way, yes, you're right. And but no, you're 100% right. I'll tell you another great Thursday. So I scalped it and I sold it to Harvey Weinstein, and that was my first foray. And Harvey came in and in WME Endeavor Ari Emanuel's office and goes, "Fuck you! I want the title, the whole deal." And I just pushed him back and I said, "Fuck you." I go, "This ain't my first rodeo." I go, "This is a hobby for me. This is not my job." I go, "I'll play it." And he didn't realize that I was working with Goldman. I knew where the bodies were buried, and they were just getting bought out by Disney, and Goldman was about to fund them. And I was able to hold that up for about a week until he paid me. So, but there was a great restaurant here in Chicago named Kiefer's. It's closed, a great steakhouse. And the chef comes up to me, and they knew me in there, and I was back from LA for a week or so. And he goes, "Bobby, I got to tell you," he goes, "whenever I'm hungover and I want to watch some real bad movies, all I do is Google you, and I pull up your movies." He goes, "Oh, it puts me right back to bed." That's what this guy's doing. "So you want some extra sauce for the steak?" And I'm like, "Oh, thanks, John. I appreciate that."
Well, that's
a great story to end on.
Great story,
great.
Bobby.
Yeah.
Thanks so much for taking the time, man.
Totally.
Always great to hang out with you.
Always fun. Always fun.
Hopefully, we'll be able to
hopefully
travel
we'll,
back and forth
see
soon and see each
soon.
other.
Exactly.
Yeah.
Maybe
All right,
I'll convince my wife to move out to the Caymans.
Done.
That'd be
Let's do it.
fantastic.
So,
All right, brother.
all right, guys.
Thanks
Thanks
a
so
lot.
much.
Have a good
Be good.
weekend.
Remember, guys, just stay on for 2 seconds as we wrap, because it takes a second or two for this to run off. I'm going to remind you, because I'm the only one after that has to sit here and twiddle